So when the dip just keeps on dipping and we're staying in extreme fear for an extended period of time, people start to panic and they start to freak out because their emotions get the best of them. So I want you guys to calm down, take a deep breath here, and we're going to get into the charts in a little bit, and we're going to discuss the likely scenarios to happen next. How much lower could we realistically go, and what happens out of here when we bounce? Because eventually there will be a bounce in the crypto market. But first, before we dive into the charts, let's talk about what's taking place, because $1.5 trillion just gone. And there's been really no headlines yet about what's been happening, because the S&P 500 erased $15 billion per minute, one of the fastest market cap wipeouts in modern history. So according to Goldman Sachs, a key S&P 500 level just broke, triggering massive algorithmic selling flows that could unload up to $40 billion in equities over the next few weeks. No news, no warning, just machines dumping because the line broke that they had their sell orders at. And this is a part of the market cycle where the markets sell off first, then everybody tries to figure out what happened later. And if we look at the S&P 500, the most recent top at the tail end of October, with this pullback right now, is only 5%. So as you've seen in the past, it can get much worse. But is the bull market over just yet? Well, not necessarily. There is a wild card that could come into play by the end of this year. And we're going to talk about the likelihood of that when we get into the charts in a little bit. But you can't argue with this. Today's move specifically in NVIDIA is truly historic. Between 4 a.m. yesterday and 2 p.m. today, NVIDIA added and lost $450 billion in market cap. That's a $900 billion swing in less than 36 hours. And if we look at NVIDIA's chart on the weekly, this just doesn't look good. We're seeing a macro bearish divergence from the 18th of March to the most recent high on the 20th of October, where the price chart is forming continual higher highs up until the most recent highest high here on the 27th of October. And the relative strength index has just put in continual lower highs and now pulling back underneath 70. So we can see the 50 EMA is all the way back here at $156. And ever since January of 2023, NVIDIA stayed above the 50 EMA. We had this brief period back here where it dipped below it for a little over 2 months from March to May. And so if NVIDIA continues to sell off to the downside, then the 50 EMA would likely act as the next stop for it. And also this key support here at roughly $165. Now, on top of that, Japan's 10-year yield jumps to the highest level since the run-up to the global financial crisis here. And the unemployment rate in the United States has come in hotter than expected at 4.4%. Plus, if we go to the CME group, the next FOMC meeting, there's a 60% expectations for the Fed to keep rates current. So what happened to the Fed's cutting rates? Well, that's now changed with the higher probability of the Fed pausing rates again. So this creates a lot of uncertainty in the market, coupled with algorithm selling when certain stop losses are hit, which creates a cascade of more selling. So I thought this was another good post talking about the process of what's happening right now, because many of you guys are holding XRP, wondering what to do with all of these XRP ETFs launching. But we've seen this playbook before with Bitcoin. The ETFs go live, market makers dump, the ETFs soak up the supply, then the asset pumps. And to prove this to you, the first spot Bitcoin ETF in the United States was approved by the SEC on January 10th of 2024. And if you look at the price chart for Bitcoin, that was the worst possible day to buy, because that's when Bitcoin was at $47,000. Right after that, the next day it went up to $48,000. So congratulations for the ETF buyers. You got an additional 2%, but then you had to watch Bitcoin plummet over 20% over the course of 12 days. And then it took another month to recover out of that low for then Bitcoin to go to a new high. So the ETF approval ended up being a sell the news event for Bitcoin. And it's very interesting how the first XRP ETF in the United States was the Canary XRP ETF, which received approval on November 12th and began trading on the NASDAQ on November 13th. Literally the exact same day that XRP dropped from $2.52 to, well, now about $2. So had you have bought into that news there, well, you would have gotten absolutely wrecked. So this is why charts are more important than ever before. This is why understanding technical analysis is extremely important here, because if you're brand new to the market, or if you've just been around the market for a while and you get excited about all this fundamental news happening, XRP ETFs getting approved, legislation getting passed, the Federal Reserve shifting to quantitative easing, and then you go to the charts and it just doesn't match up, because with so much positive news, you see so much selling pressure. Well, this is why we pay attention to what's happening on the charts to get a more macro picture. So don't get me wrong, this type of news is bullish.
A series of questions here. Number one, what is a Bitcoin reserve? What does it do? And how do you build it?
Well, first of all, the president created a strategic reserve of Bitcoin in part because the United States government didn't have like a single custodian. You had every agency in the government that might have had an asset, seized an asset, or anything else any kind of digital asset, they didn't have custody of it, so they were losing track of the private keys. So essentially, when you lose your keys, it's like losing a pile of cash.
Yeah.
So they created an organized way and put it under Treasury to say, hey, we're going to have a single custodian for all of the Bitcoin, kind of like Fort Knox for crypto, right? Okay. And then they said, well, not all crypto is created equally. Bitcoin we want to hold on to. It's an appreciating asset over a long period of time. Some of these other things, we should just sell them off and buy more Bitcoin. But they wanted to do it in a deficit neutral way. And I think a lot of people have been like, well, how else do you put money in there? And so we're introducing legislation that not only codifies that executive order, so there's a common sense way to have custody for the Bitcoin and other digital assets, but you can contribute. So when you pay your taxes, you can pay your taxes in Bitcoin. So Bitcoin is currency in that sense, and there's no capital gains.
When you see certain announcements like this have an inverse effect on the price chart, like what's even happening right now, with Bitcoin selling off over 20% since November 11th, within the past 9 days, this is what we need to watch here. So the last time that Bitcoin had a weekly candle body close below the 50 EMA this far into a bull run was all the way back here on the 3rd of January, and Bitcoin proceeded to dump 26% below the 50 EMA after it already had dumped 35% to get to the 50 EMA. So a total of 50% being wiped out of Bitcoin over the course of 77 days. And if we just measure from the all-time high for Bitcoin to the 50 EMA, that's 20%. And then if we measure from the 50 EMA to where we're at right now, it's another 14 to 15%. So whereas the last bull market all-time high to that low was over 50, 51%, right now this sell-off is only 30%. Now, does that mean we need to drop 50% for the sell-off to be over? No. But what we need to look for here is confluence on different indicators and also support and resistance levels. Because as you can clearly see, last bull market and bear market, there was a major zone of support back here, which was a very wide range from about $40,000 to $28,000. But you can clearly see when Bitcoin closed below the 50 EMA and it saw this massive red candle back into the zone, we saw the stochastic RSI all the way down here in oversold conditions. The relative strength index dipped down to 36 on the weekly. So right now, the relative strength index is at 35, and the stochastic RSI is at 4 and 0 in oversold conditions. So at some point, this sell-off will be done, and they're just ripping the Band-Aid off right now with this cascade of selling here. So when we see the bottom come in for the sell-off, somewhere between where we're at right now, and I mean, this could go all the way down to $74,000. Nobody knows exactly how low this will go, but what this reminds me of is what happened back here, and everyone freaked out and sold the most of their crypto right here when we were in oversold conditions. Then the stochastic RSI proceeded to make a recovery back here all the way up to 80 on this retracement to try and reclaim the 50 EMA. So leading into December and January, that's my expectations. Now, I could be completely wrong, but once the sell-off is done for Bitcoin, I would expect there to be an aggressive bounce back to the upside. And the 50 EMA right now is around $100,000 on the weekly chart. This will also curve back around, and that could be anywhere between like $95,000 to $100,000. Because as you can see on the left-hand side of the screen, when Bitcoin broke below the 50 EMA, it was at roughly $45,000. And by the time it came back up to make contact with it, it was at $44,000. And then by the time it closed above it, it was at $43,000. So depending on how low we go in the short term and how long it takes for this recovery to happen, well, my expectations would be for the stochastic RSI to experience a bullish cross and to reverse back to the upside. Also, the relative strength index to make a short-term recovery. And then depending on how aggressive and how quick that recovery is, a likely resistance will intersect the 50 EMA, which simultaneously was support back here on the 16th of June at around $98,000, $99,000.